All right, what is going on, everyone? Welcome back to the channel. In this video, we're going to discuss HEX, the battle of the bulls versus the bears. We have people in both camps right now, some saying this was the top and that we're headed down, others saying this is just the beginning and we have further leg up to go. So we're going to cover both sides in this video, and go ahead and leave a thumbs up if you enjoy this kind of quantitative hybrid technical analysis. I got a comment saying I shouldn't update you guys on the subscriber count every single video, which they have a point, right? But this will be the last time for a while. Just really to thank you guys for 3,000 subs. Big milestone. I'm super grateful. And let's continue on with this video. So we've been covering this 21 EMA for a while, saying that it is generally for the last 6 months or so held significance in the sense that below it, good time to buy. Above it, generally a good time to hold off on buying, right? So we've seen these regions of accumulation beneath this purple curve, and we had a fake out recently here on 23rd, 24th of May, as well as over here 26th, 27th of June, and currently we're dancing with it, man. Like, it's at 7.78 cents and price is currently at 7.8 cents. So we're right above it, closing this candle in about 4 hours or so. By the time you're watching this video, it's probably like 2-3 hours until this candle closes. So if it closes above it, I'm bullish. If it closes beneath it, we'll have to wait because we did have a fake out over here, and maybe this is just accumulation near an all-time high before a further move up. And that kind of leads us into this idea of a three wave, right? What do I mean when I say could be in wave 3? I've seen this being mentioned plenty in on Twitter, on YouTube, etc. And I didn't really get what people meant until I kind of zoomed out. And if you zoom out and you subscribe to this Elliott wave kind of analysis, we have an entire video on sort of a shorter term Elliott wave analysis of this move over here. But again, once you zoom out and look at the entire history of the HEX price, let me look for our, here we go, our Elliott impulse wave. Then you have some people drawing it like this, right? Where this is wave 1, wave 2, and they're saying we could be in wave 3. Now, if you remember Elliott wave analysis, then wave 3 is generally not the shortest, right? It's never the shortest and generally the longest. So let's finish this so I can show you guys what I'm talking about. That if you're to take the size of wave 1, it was 116x. So if we assume it's not the shortest, then in theory, it would have to be, bigger than 116x, right? So that would put us at a minimum price target on our wave 3 of, let's set it at 116x. And in terms of time, we don't know as much. I've gotten some crap recently for giving you guys projections without time frames, which that's a good point. So I'll try to do better with that. But 116x would be our minimum target if this is a wave 3. And funny enough, that is actually at 23 cents. And we've talked about the fact that we could hit 12 to 24 cents. And the time frame for that, I would think, would be July or August. Now, I don't have a crystal ball. I have no idea. Maybe we see some consolidation before continuing our move up. So July, August, September, I guess you could say, is a conservative estimate for the 12 to 24 cents. But then when we do this wave analysis, our Elliott waves, we see that, well, 23, 24 cents is actually our minimum target. So that kind of leads me to think, well, is 24 cents our maximum or our minimum target here? It seems like a sweet spot, a convergence of targets, I guess. But if we're to say it's the longest wave, maybe by 2x, right, then we could be looking at higher prices, much higher prices. And then keep in mind that's only a wave 3, whereas our 5th wave would take us to kind of our final top, so to speak, before we see a correction, which would, in theory, maybe look something like this, an ABC correction, right? So we'll let time tell us what's good. We'll let time do that. But in the meantime, I did want to point that out, that if you do subscribe to this Elliott wave analysis and you subscribe to the idea that we are in our macro wave 3, then you would probably be in the camp that 24 cents is our minimum target for this wave 3 because of the fact that wave 3 is generally longest but never the shortest. So this wave 3 target and wave 5 target are discretionary, right? But we'll see what happens, right? So that's what I wanted to cover in that sense. If we look at our regression rainbow, then we know obviously that we're still between red and orange, or excuse me, between orange and yellow, like we were over here. It's been playing out slower, right? We've been in here for about, what is this? Let's see, May 8th or so, and we're in early July, so almost 2 months, right? Whereas over here, we actually only hung out in there for about a month. So it makes sense that things are playing out a little slower, a little more elongated, and we'll keep you updated with our extension from FIT, because again, nothing's really changed. We're still between orange and yellow. If we were to break orange, the downside, that'd be significant. If we were to break yellow to the upside, that'd be significant. But as long as we're in between orange and yellow, which corresponds to like, you know, between 6.7 to like 6.7 to 10-11 cents, as long as we're between like 7 to 10-11 cents, then nothing's really changing. We're still potentially playing out our fractal. Again, if we're to break either above or beneath this sort of band, then I would start changing the thesis, right? Or the projections. But still looking good. I think this fractal could still play out, and it would correspond to a wave 3, right? It would correspond to a wave 3. So things are looking good on that end. If we look at our HEX versus ETH ROI from launch, then we see that we're doing pretty well. We're doing pretty well. If we were to see, I mean, look at this, right? This is our performance index, and we have this big spike when we have this big gap here. And we have a big gap here recently, which corresponds to this spike where I actually didn't update you guys, but we went as high as about 30x extended, which means that at this point in time, HEX was outperforming Ether by about 30x at the same point from their respective launches, which is incredible, right? I think it's absolutely incredible. And it's been performing faster, right? Like we saw over here, this local peak, 219, day 219, whereas on HEX it was on day 150. So what, like, I think I did the math a while ago. We can do it again here. What's 150 over 219? Let's do that real quick. So it only took about 70% of the time. And then if we look at maybe this local peak, 552 compared to 676, about 80% of the time. So it's 20 to 30% faster. HEX is performing 20 to 30% faster than Ether was in its respective ROI from launch window. So if we're to be conservative and say, all right, what if HEX performs 25% faster than this local peak here, which was the peak we all know and love of Ethereum when it hit 1600 for the first time back in January of 2018, then that would correspond to, let's do this math real quick. I'm just doing 75% because it's in between the 70 and 80, and multiplying it by 892, which gives us 669, right? Which would put us around over here. What day are we on? 564. So about 105 days from now. It was like October 17th. So if we continue to play out this price performance on HEX 20 to 30% faster and actually reaching peaks a little higher, we'll be conservative and say it reaches the same valuation over here, then we could be potentially looking at, let's do some final math, 770 over 155 times current prices could correspond to approximately 39 cents, right? 38.7 cents. So almost 40 cents by October 17th-ish. There you go. So that's a reasonable estimate of 40-cent HEX by October or by November. I mean, I don't have a crystal ball. I'm just looking at the data. And then if we look at our sort of our handicap model, because we essentially made it a little easier for ETH on this chart by saying, well, maybe not ROI from launch, but rather a separate thesis, which is ROI from December 17th on their respective years, 2015 for ETH and 2019 for HEX respectively, which gives us sort of a different perspective, which is actually a little more bullish. It's actually a little more bullish. It tells us that we could be seeing a 9x within the next 200 days or so, which would put us at, what is that, like 60 cents? 60 to 70 cents by maybe early next year. So these are reasonable targets in my opinion, where you know you have HEX hanging out at a certain level, and then all of a sudden you're in a 10x higher regime. For example, end of last year, we were hanging out, and even early this year, we were hanging out around the the 0.007 region, and then lo and behold, just half a year later, we're in a regime 10x above that in the 0.07 region. So it's not hard to see that 6 months from now, end of this year, early next year, we are 10x above this in a new regime around the 60 to 70 cents. So it's happened before. Historical precedent is the main metric, really, the main methodology I use here on the channel. Historical precedent, has it happened before? Okay, let's take a look at what that might imply for the future. Obviously, past performance is not indicative necessarily of future performance, but it can give us some insights, right? It can give us some insights. And I will contend that we're bullish as fuck because, again, support on previous resistance, bullish divergence, fractal looking pretty, absolutely not only keeping up with, but outperforming Ethereum from launch, outperforming Bitcoin from launch, which is what I wanted to touch on as well. This fact that at this point in time, we are about 2.2x above where Bitcoin was during its ROI from launch, say a similar window. And this is really interesting because when Bitcoin was here, after this bubble it had, right? So after this bubble, Bitcoin had its bear market, obviously, but what I'm trying to get at is once Bitcoin was in an uptrend again and it reached this sort of 155x ROI from launch, this was right before this incredible rally over here, which only took about 100 days to play out, right? So let's just have fun here and speculate and say, okay, well, HEX is in an uptrend, right? Okay, check. Bitcoin was in an uptrend over here at 155x. And then if it took 100 days to run up the way it did, then we'll see what could happen from here, right? What's 2687? So there's a lot of math on this channel, right? 2687 divided by where we are now, which is about 155, is about a 17x, which would put us at $1.35 by, well, on here it says by day 1,000, right? But on HEX we're ahead of the game. We're ahead of the game. In the sense that Bitcoin was here around day 897, yet we're here around day 564. So that is approximately 40% faster if we assume the same sort of speed, right? Then we could be looking at these levels literally in 2 months. So if HEX continues to perform 40% faster than Bitcoin, then it would imply $1.30 HEX by September. So now you start seeing some really, really bullish projections, $1 plus by September. Some more conservative projections, like we said earlier, maybe 40 cents to 60 cents to 70 cents by maybe late this year, early next year. So you have both camps, which are either conservative bullish, short-term bearish, or just absolutely moon boy, dollar in a few months kind of analysis. So we'll see what happens. We'll see what happens, right? And yeah, I just wanted to update you guys on that. The fact that it's interesting because, again, Bitcoin was in a bear market over here and it was barely coming out of it. Whereas with HEX, we're just tearing through. So the fact that we're this far extended above makes me bullish and just kind of shows us that price could run away from us on this chart, right? The price of HEX could just keep going, and it might be a while before we actually see it come back to hug this blue line, which is the price of Bitcoin, or the ROI of Bitcoin on a similar time frame. So I know this video was called HEX, bulls versus bears, And in reality, we've really shown mainly bullish perspectives. I guess let's show you something bearish, just so we're not completely biased. We do have some weekly divergence here. Remember that divergence can be invalidated, and I'll explain how one way it could be invalidated here. Like, yeah, we saw this divergence. Have we seen a dip? Definitely. We saw a 35% dip or so. And what I meant by divergences being invalidated was, well, if price does something like this, or if RSI does something like this, comes back above, then at that point, well, you don't really have divergence anymore, right? You don't have lower highs. And if price keeps making higher highs and then RSI makes higher highs, then in that sense, we've invalidated our divergence. So, I mean, RSI isn't something you can always take to the bank. It can be indicative of short-term moves. Like, you could have called this this local top here with some daily divergence, and we did have a 35% dip. But at the end of the day, we have some bullish indicators. Oh yeah, that was on my other chart. No wonder. I was like, where did all that stuff go? Here it is. So yeah, I mean, what are your thoughts? Do you think we're going to hold this 21-day EMA? Do you think it even matters? Do you think we're going to hold this level of 6.7 cents? If we do test it, do you think we're going to even test it again? We might not. We might. We'll see. But if we do, I think it's huge, huge support, just like it was over here, and like it could be again in the future. But yeah, we'll keep you updated on that. Thanks again for watching. Be subscribed by now, most definitely, if you aren't already. Let's blast all the way to 4K subs. I know we can do it. We went from 2K to 3K in like 33 days. So maybe we can do this one a little faster. We'll see. But yeah, with that said, thank you so much for watching. Leave a comment on what you think is going to play out. Things are pretty neutral right now, in my opinion. Like, that's why I labeled this video bulls versus bears, because that seems to be the sentiment right now. So let me know which camp you're in. Leave a thumbs up. Once again, thanks for watching, and I'll catch you in the next video. Peace.